Hello everyone, welcome to the weekend webinar. My name is Lee McMahon. It is Sunday, January 26th. We had a very interesting end to last week. I am looking for an interesting week this week, a very busy week this week. So we have lots to talk about. So please read over the risk disclaimer, which should now be on your screen. If you're watching the recording, please pause the recording, carefully read the risk disclaimer, and then we will go to the charts. All right, so let's start with E-mini futures, just a general idea of what happened Thursday and Friday of last week. In short, we saw a fairly significant sell-off. All right, Thursday was a relatively sort of contained day, down day, but stayed well supported by this ascending trend line and stayed within the range. But then Friday, I think we clearly found some stops here, moved below the 50-day EMA, which has been fairly supportive lately, closed solidly below there. All right, we closed really as low as 17. I think we closed pretty much at the lows. 1780, yeah, it was the low. We closed at 1780.25. So basically closed on the lows here on E-minis. Next major support is 1768, this 100-period EMA, and then this trend line up here on 1731. Below there is the next significant level. Dow futures were, the Dow is the worst hit, all right, lost over 300 points on Friday, just shy of 2%. You can see it broke some pretty key technical levels as well. Its major support level is about 15.5 thousand. All right, that's actually a very strong level there. Would be very surprised to see that fail on the first test. If we do get there, I would expect to see some sort of a bounce, and then maybe we'll sell off, or maybe the uptrend will continue. We'll have to see. But that 15.5 figure is going to be in focus when we get there, if we get there. So this sell-off was sparked, all right, by a decline in emerging markets. All right, this is the iShares MSCI Emerging Markets ETF. It was down 2.6%. Really does not quite reflect the damage that was done in emerging markets. Emerging market currencies were hard hit as well. All right, this is the dollar against the Turkish lira. You can see Thursday and Friday we've pretty much gone parabolic. The other currencies that were hit, the Argentine peso was the hardest hit. It lost 15% against the dollar. The lira got hit pretty hard. The South African rand got hit pretty hard. All right, the Russian ruble got hit pretty hard as well. So these, emerging markets, brick-type currencies paid for it dearly on Thursday and Friday, and that's what sort of sparked this move lower. The Nikkei as well, all right, hard hit Thursday and Friday, which plays into the yen strength that we've seen. The Nikkei put in and then broke a head and shoulders pattern. All right, we broke it on Thursday, saw a great follow through on Friday. It has a major trend line supporting it here at about 14.7. So that's the next level to really keep an eye on. Same thing, I would be surprised to see it go on the first attempt, but if it does, look out below. Nikkei looks pretty bearish here. Very possible, all right, that this head and shoulders represents some sort of medium-term top, and we could be in for, it's somewhat of a decline here, down towards maybe 13.7, 13.5, 13.2, this area right down here. I would expect 12.5 to hold, all right, if we do see a dramatic sell-off, which is this, basically where this, the last nasty reversal here in the Nikkei ended and the uptrend began. So this uptrend is not quite yet in danger. We need to get below 14.5 really before the uptrend, or such as it is in danger. But there are some signs that we may be looking at a more significant correction to come. All right, one of those signs is the performance of the yen. All right, this is dollar yen. All right, after touch that 105.43 high, the sell-off has been quick and fairly brutal. We pushed through this medium-term trend line, or this rather short-term trend line, and now we're pushing through the medium-term trend line, and the major support comes in at about between 100 and 99 or so, that 100 pip range. All right, get rid of this trend line. I'm hoping right now. Okay, we have this ascending trend line in the 200-day EMA to contend with. Should we manage to break through the levels that we're currently testing now? Other yen pairs also took some abuse last week. All right, Aussie yen, big time loser. sold off very hard, now approaching 88. All right, as we're seeing selling pressure start the week here on the yen pairs. 86.20 or so is major support on Aussie yen. You can see these two rejections right down here. So watch that level, but up until then, things don't look particularly great for Aussie yen. Some of that is because things don't look very good for Aussie dollar either. Let me show you a longer term chart. I'm going to show you 10 years, all right, of Aussie dollar, so you get a general idea of what I'm looking at. Let me get rid of this extension, this little note. Okay, so right now there is some fib support here. It was correctly pointed out to me on Twitter. Okay, we're nearing this 50% fib from the 60, basically the 60 lows back here in 2008, up to the 110.79 highs back in 2011? Yeah, 2011. All right, that's at 85.42. So about 150 pips lower. We get to the first sort of fib support where you run this major, that runs this major high to low. But if you look at it, ignoring the fibs for now, there's not a lot in the way of support now that we have broken, all right, beneath this previous low dating back to August of this year, all right, or last year. So once that level went, all right, there's not a lot down here. All right, we can see there is some, minor levels here about like 83 where price found a bid. There are some levels down here at about 80.60 where price has found a bid. But other than that, you can see there's not a lot recently, and it looks like the sell-off has the potential to continue to liquidate lower. Last I saw, something like 70% of retail was long Aussie dollar, which means there's still a lot of stops, all right, looming down here. We basically rejected at a 50% fib, all right, from that 105, peak above 105 down to that 88 low back in August. All right, so if that was a 50% fib, I like to do some extensions to give me some downside targets. Okay, the 100% extension is 80, and the 161.8% extension is 69. So we do have some fairly significant downside left, I think, on Aussie dollar. We'll see if anything happens to change that macro picture. Certainly the RBA could, if housing prices continue to get out of control in Australia and they feel like they have to raise rates regardless of what it's going to do to their currency, certainly we could start to see the Australian dollar find a bid and rally again. Right now I don't see that happening, but the RBA is definitely one to keep an eye on because they could change the game. But for right now, it does look like the Aussie's in a little bit of trouble here, which does not bode well for Aussie yen, all right, but it does probably bode pretty well for Euro Aussie. If we do see this is again still a longer term 10-year chart, if we do see the Aussie continue to sell off, all right, same thing, 163.60, it's about 600 pips from market. That is the 50% fib, all right, from the 211 highs basically to the 116 lows. All right, remember the European financial crisis drove this pair way lower. So there is still a lot of upside here on Euro Aussie. If we do see any sort of dips, about 156.60 is a nice buying opportunity, I think. The one thing that needs to be noted here on all these Aussie pairs, all right, is that we do have some significant RSI divergence here on Euro Aussie. It shows up on Aussie dollar. Okay, you can see RSI has made lows here and did not make new lows with price. And I think it's actually there on Aussie yen as well, although not really as dramatically. All right, so just sort of something to keep in mind that we may see chop and we may see a bounce, but generally it looks like these pairs, these Aussie pairs, are set to head a little bit lower. Some other yen pairs to take a look at. All right, pound yen. Wow, pound yen has sold off pretty well here to start the week. There's head and shoulders here, possibility on pound yen as well. Are we really already down 0.5% on pound yen? Hold on one second. Yes, we are. Wow. Okay. So pound yen is taking a beating. Already down 0.5%, and we just opened 13 minutes ago. Not bad. So this is a head and shoulders break. All right, it broke on Friday. It sold off here. The measured move measures 162. All right, that's 580 pips from market. So if we do see some sort of bounce up to this 169 level, look to maybe short pound yen. It looks like a pretty decent short opportunity here. Pound dollar. See if this is a pound sell-off. Not really. Pound dollar a little bit lower here as well. It's got major support at about 164. I probably won't be able to help myself but to buy it at that 164 figure if we get there. All right, it's a trendline retest. It's the 200 period EMA here on the 4-hour chart, so that 164 level is definitely worth keeping an eye on. So if it's not pound dollar, it's got to be, yeah, all right. So we see dollar yen already about 0.4% down today. Still low liquidity here really until like 7 p.m. Eastern time, so about an hour and 45 minutes still, where we could see a dramatic reversal and nothing, it wouldn't really surprise me. Asia is really just coming online. I think really only New Zealand markets are open. Australia opens shortly, and then 7 o'clock is when Tokyo opens and things really kick in. So watch the Nikkei around 7, all right, and see if it heads quickly lower as Japanese traders come online. Some of the other yen pairs that I've been watching, Euro yen broke down here below 140. This pattern not really as clear, or perhaps it's too clear. There's obviously some sort of extended head and shoulders pattern going on here as well. But like I said, the way that this right shoulder has kind of come up has made it a little bit trickier to trade. So I guess that could be your neckline. 140 basically is the level to watch. So if again we see that 70-point rally, you try to short it up against excuse me, that 140 level. Kiwi dollar 82 is major support, or at least minor support. It's been holding up pretty well. The next level below that is 81.50, and then 84 is resistance. Kiwi dollar has been just awful to try and trade lately. I haven't touched it in a while, and I probably won't touch it until either 81.50 or 84 goes. I'm not going to try to play this middle range at all. Euro dollar. All right, so we saw this breakout here. We saw it retest and then rally pretty well. It's worth noting where the rally halted. Okay, right at a 618% fib level. All right, we got a nice reversal candle off of that when it was overbought. So there was some evidence here before. We'll see now. If it does continue to sell off, this 136.20 area is going to be support, and then this 135.60 area is going to be support. Tough to really do much on euro. I think until below 135 or at 138, where you could try to sell it there. Euro Aussie again. I still like it higher. The 50% fib of the major highs to lows. Basically, the highs hit right around the market bottom, and the lows hit right around the peak of the European financial crisis. Gives us to about 163, which is about 600 pips from the market price. About 156.33 could be a nice opportunity to enter if we do see a dip. I would love to see this pair cut sideways for the next 3 to 4 days. Maybe dip down to this 156.30 area so I could get long, work off this overbought, and then continue higher. If that is indeed what happens, if we do see it work sideways for a while, not really breaking back down, but staying above that 156 figure, I think then it looks good for a longer term long on Euro Aussie. Longer term being at least 2 to 4 months of upside on that pair if you want to just hold it, or if you just want to make smaller trades up that trend. Depends on your style, but that 156 level should provide some pretty decent support going forward, and if we see a consolidation, I would be looking to buy it. Some of the other odd crosses I didn't cover, and this pound Aussie. If we see a dip down to 188 on pound Aussie, I might try to buy it. But generally speaking, I don't like this pair. Pound Kiwi is really ugly as well. I don't have a great setup on that. Euro Kiwi also pretty ugly. Maybe try buy a dip down to about 165, but I think there are much better setups out there. Kiwi CAD is again ugly after making those new highs. We pulled back pretty hard. About 90. All right, 0.9 looks like it'll be a good support level, but kind of have to see what the market does and how it gets there. Because right now it's looking a little unclear. Aussie CAD, all right, at support here. All right, this 96 level is pretty decent support. If it breaks, then we're headed down towards about 94.50 or so, I think. All right, and from 94.50, you could actually try a long. There's a decent technical argument to be made there. It's a retest of this descending trend line that dated from October to very early this month. So it's a pretty solid trend line. It's got 1, 2, 3, 4, 5 tests of it, so well respected. So if we do see a dip down to retest it, it may be worth an attempted long. Dollar CAD, I don't know. Major support comes in at about 110 now. All right, so about 65 pips lower. But I don't have a great hankering to buy dollar CAD right now. If we kick around a little bit around 110 and maybe give a consolidation or possibility for a long, I might take it. But I really think that this 110 area is the new trading range for dollar CAD. And I don't have a great interest really in the upside anymore. I've kind of just ignored it, and I'm going to use it to trade the crosses maybe. If you look at the 10-year, all right, look at dollar CAD, you can see that we're kind of back in this median of the overall range. So the overall range recently, starting basically in 2009, it's about 130 to 95. All right, so we're sort of back in the middle of that range. And I think that's about where we should be for right now. So I don't know how much upside we have left on dollar CAD. You can see the midpoint, that 50% is about 112. So we could see a little bit of upside still on dollar CAD, but I think the big move here was this acceleration from 107 to 110. Some of the other CAD pairs then, we looked at Aussie CAD and Kiwi CAD. Here's CAD Yen, all right, which has just been obliterated since the 6th of this month. All right, it's lost over 600 pips, nearly 700 pips. And it is nearing a next sort of fib extension support here, and we are trading near these previous lows from June and August and later in August and October. We're slightly below them, but we're kind of in this overall range for CAD Yen. So we may see CAD Yen kind of stagnate a little bit. But if if that Nikkei head and shoulders plays out, it's going to take all the yen pairs with it. Just to what degree, remains to be seen. But you can see where CAD Yen is now. It is at a support level. It's been in this rectangle for a couple days now, so we'll see if it manages to find a bid, or if it stalls here. If we see it stall sideways, I'd trade a breakout to the downside. Pound CAD, I like to the upside still, but I'm hoping for a fairly significant sell-off. This is another good one to look at, 10-year. You're just going to take my word for it, that this trend line has 2 previous touches back here, and it comes in at about 189 or so. All right, so still 700 pips to the upside, but I think this move has become a little bit overdone, and we may see some sort of correction here. As again, I think dollar CAD stagnates, and that would mean that pound dollar moves a little bit lower. Eventually, I don't know. I'm still pretty bullish the pound. Like I said, I'm probably going to try to buy it at 164 against the dollar. We are near the top, all right, of the pound dollar's recent range. The range started back here, 09 or so. All right, you can kind of see we're near the top side of that range now. So not really that surprising that we're seeing the pound struggle here, but if we can catch a bid and push higher, you know, we may see some significant upside. Remember, we saw something fairly significant happen to the pound earlier last week, later last week, I think Thursday maybe. The pound hasn't really, I mean, until maybe this Friday sell-off was a reaction to it, ignored it for a while. We saw Carney, the Bank of England governor, say that he was dropping the forward guidance that they had been relying on. I'm not sure he's made that official yet, like in a Bank of England letterhead type official. But the story is that they're going to drop the unemployment rate target, which currently sits at 7%. Unemployment in the UK is something like 7.2%. So they're going to drop the unemployment rate target and focus on a bunch of other factors to decide whether or not when they're going to start cutting asset purchases and raising rates. That's going to make a lot of people irritated, and they're going to say that central banks have been lying to us and they're stupid and all the other stuff that you usually hear people say when they're talking about central banks. But in this case, I think all this shows is that Carney has a pretty good idea of what's actually going on in the economy. Better, I think, than some of the other ones. All right, the Fed has stuck by so far their 6.5% unemployment rate target. And we're going to get there sooner than they think, but we're going to get there with a very low participation rate. So that's not good news. It's not a realistic reflection of the state of the unemployment rate. Also, with the persistently low inflation that we've seen, all right, the risks of cutting the quantitative easing, the risks of cutting the asset purchases in the UK may outweigh the benefits. So we'll have to see how exactly they all handle that going forward. And we'll get a pretty good clue on Wednesday how the Fed's going to handle it. We do have the FOMC meeting on Wednesday. I think the general consensus is that we will see more tapering, another 10 billion maybe. So that's the expectations going into it. We'll see what they say. This is the last meeting chaired by Bernanke before Janet Yellen takes over. So we'll see what kind of commentary we get about the future of the taper and the future of the quantitative easing program and how exactly the Fed is feeling about the economy. So that's something definitely that's going to keep markets very busy on Wednesday. Some of the other things that are going to keep markets busy this week, the RBNZ rate decision is also Wednesday, so that's important. We have a bunch of U.S. data, including GDP, prior home sales, new home sales, durable goods, maybe a couple other ones that I'm missing. And we also have a very, very, very busy earnings week. All right, it's earnings season here in the U.S. This week, Apple, Ford, 3M, DuPont, UPS, a bunch of people are reporting their earnings. And those will affect risk and they'll affect equity markets, which in turn affect currencies. So sort of just be aware those are going on. A couple other things to look at. Gold continues to try to base here, all right, off that 1180 or so level. Ideally, if it gets over this 1275 hump, which is the 100 period, the 100-day EMA, all right, it should continue to manage to push itself higher towards about 1340. I don't even know why I like that. Silver, don't ever trade it. Silver actually hasn't followed yet, so there is a trade here. I don't trade silver. I don't think I'll ever trade silver. But if we do see it break over this trend line and you like trading silver, there's a good long opportunity there. Crude. Crude is tough here. I don't think there's actually a good setup here on crude. The setup was buy here on the retest. All right, and I don't think there's anything to touch here. Don't forget that natural gas, all right, went parabolic the last 4 days thanks to record colds in the north, not record, but it's pretty cold here in the Northeast. So that's pushed natural gas higher. I mean, it was up, it's up like 30%. No, it's up about 25%. in the last 4 days. So pretty significant run from natural gas. If you trade it, be looking for some sort of retracement here as we got some significant RSI divergence going on. About 4.6 would be your first support level. Another thing that I don't trade and never will. Other pairs, dollar Swiss. Is it record? It's definitely, I mean, I feel like, I don't know if we've set, I'm in Buffalo right now. I don't think we've set a record, but it's been cold. It's been really cold. I know it's been cold in New York, DC, all the, Philly, all the East Coast cities. Very cold, very unpleasant. Dollar Swiss, 89 held, so, and then on a daily closing basis, this descending trend line held. It's under a little bit of pressure here again to start the week, but like I said, it's early. I like dollar Swiss to the upside here, off this trend line towards about 91.60, and then of course the big level comes in up here. All right, at 97, there's a major connecting trend line up there, so there is some room here if it can manage to push. All right, off here, off this trend line, and use that to push higher. I did the yens, I did those. Euro Swiss, okay. If you trade it, I mean, if you're a long-term trader and you like buying things, you can start buying Euro Swiss here, buy it all the way down to that 121.65 low, and hope that the Swiss frag starts to weaken again. Euro Pound. Caught a bid off the bottom of the wedge. I tried to buy it here and I got stopped out. All right, you can see we broke out below the wedge and came back into it, so kind of bummed about that. But it does look good to continue up, maybe towards 83.70. And if we break out of this wedge, I think that's a pretty decent upside trade on Euro Pound. But this 200 period EMA is first. That's at 83.08 right now. That's so basically market. And that's a pretty solid resistance level. All right, do I have any requests for things that I've missed? All right. Then I think I covered basically everything I wanted to cover. Very busy week this week. Lots and lots and lots and lots and lots of data. Plus, obviously, the Fed. Plus earnings weeks. So yeah, it's gonna be a very busy week. So far, not off to a great start for the bulls. As those yen pairs have sold off already. I mean, they've recovered a little bit, but pound yen's still down almost 0.4%. We're only 30 minutes into the trading session, so we'll see if they manage to sustain that or not. All right. Good luck trading this week. I'll post the recording sometime later tonight, so you can keep an eye out for that. Thank you very much for joining me. It's always nice to start the week with you guys. Good luck, and I'll talk to you soon.